now. The camera quality is much better. So I can see the chat here. There is a slight delay, but I can see it on my iPad. Give it a couple more minutes, get some more people in here. I'm taking questions if anyone has any. I see one so far, which I just answered. Why there was no correction in September, I think it was because the Fed is cutting rates. And there's expectations of more rate cuts. It's weird, though. September, October usually is when we do see corrections, and we're not. I think there's also less uncertainty about the election. It seems like it's going Trump's way. And I think people like the idea of the extension of the tax cuts and probably lower inflation because of the exploration, permitting of oil. Just a heads up also, for a limited time, I'm offering coaching for people who are interested. I get a lot of messages requesting this, and I do have a special DM service which does include phone calls, but I realize some people want to do it a la carte, so I'm doing it now for a limited time, limited space for $100 an hour. So if you want to level up your game, or if you just need some help and you want to talk to me one-on-one, just DM me and we can set something up. I'll do some deals with packages if people want to buy multiple sessions. Tesla thoughts. All right, we'll talk about Tesla. Camera quality this time is much better with the rear camera. I just had to figure out how to see it, and now I do. I have it on my pad. It's really interesting with the Elon Musk thing today, right? With the news that he supposedly was talking to Putin. I think they're just using that as justification for spying on him, but that's a whole other conversation. Let's talk Tesla. Market is definitely getting a bit of a liquidation break here. Doesn't surprise me that 5,900 was some resistance. It was like 5,900.75. We are into some support here, by the way. This is the where the channel low is, where ES and the Qs are bouncing from. So my thinking on Tesla was it was a big short squeeze here, right? You had that big gap down post robo-taxi event, and also they had crappy deliveries. The last time they had crappy deliveries, they had crappy earnings. This time they got a little bit of a break because the cost of lithium batteries had dropped, and that was unexpected in the numbers, so their input cost went lower, and I think that translated to the earnings beat. I don't know that that's going to be the case next quarter, but I think that is what took place there. Also, we had talked about this. When what shouldn't happen does happen, it can be quite powerful. So I had said if we got over 226.5 that we likely would fill the gap, and we've done more than that. It looks to me like they're going to try to run it up to the highs, 271, but we also know that there's responsive selling here, right? We've seen that at Apple, we've seen that in JP Morgan, to some degree in NVIDIA too, although NVIDIA looks like it's trying harder to break out than the others. It's got a bit of a topping tail today, but it is above 140.76, so as long as it's above there, it's okay. Yesterday, the 10 MA caught it at 138.94, so that remains the must hold. The more time it spends over 148.76, the more I think it's going to 150. So that's still to be determined, obviously. Next week, by the way, we have a lot of the big cap tech earnings, right? I think that's the big boys are reporting. Usually Google and Meta go the opposite way on their earnings, but usually the same way on the first to report. I'd have to take a look and see. So Google is on the 29th. I mean, this is a pretty reliable trade. It doesn't always work, but it often works. So yeah, Google's going to report on the 29th. So if that takes Meta up, it could be a fade on their actual earnings, and vice versa. If Google's down, it could take Meta down, and then maybe Meta rallies on the numbers. I'm kind of torn with how these companies are going to benefit. I saw on TV today they were talking about people holding back purchases because of the election, and we also know the hurricane situation. So I'm curious to see if that's impacted ad spend, and that if that's going to show up, or if it was just too late in the quarter and this already had gone through. So that's something I'm a little bit torn on in my mind. But if Google could get over 169, I think it could really go. The 169 area to me is sort of like the Tesla 226.5, obviously different situations with different types of short interest. Anything else anyone wants to cover? Happy to do so. Meta, by the way, needs to get over 581.43. That to me is the key short-term neckline. If it can do that, I mean, I could make the argument 585 if we want to be tough graders. That would make some sense to me. If you want to type a question in chat, feel free to do so. I'm back on YouTube, by the way. So if you're not following me on YouTube, be sure to do so. I'm going to start doing some lives on YouTube as well, but most of my posse here is on Twitter, so why not? Or X, sorry. VKTX. Yeah, we talked about this one a bunch of times. We had said that there was some room up to the channel high, 78.53. It's actually a little bit above the channel now. I would take the gains on some of it because you came up pretty much from the bottom. I think there's maybe some more room up here to 81.81, and I would probably hang those orders out there. But yeah, obviously it moved on the earnings. I like that it was the shake and bake down into it. 200 MA would have probably been support at 58.53, but now we're up at the channel high, so probably a good area to start trimming into. I mean, I could make the argument if we re-rendered the channel and we made it a little bit wider. I don't usually like to do this, but it could get up to 82.78 if it did it tomorrow, so I would pepper some orders out there, 81.81 to 82.78, and probably trim a little today given it's day 2 of a big pump. And particularly if you're in calls, maybe it gets a consolidation day or something and it could suck out some of that premium, depending on how long dated you are. Usually what I'll like to do, let's say I'm in an earnings play and I'm in a near dated expiration, what I'll often do is roll it out. Or if it's just naked calls, I'll make it a spread longer dated so I have some protection on and I lock in at least some of those short-term gains. All right, thumbs up. Any other questions here? I'm gonna just we got enough people in here. I'm just gonna start doing my spiel. So with regard to SPY, thoughts on Bitcoin? Yeah, we'll do some Bitcoin. BTC, and you want to talk about micro strategies, MSTR. All right, I'll get to that in a minute. Let me just do some of the indices here because that's obviously what this is all going around. Yeah, we could cover Amazon too. That's also going to be something. I'm curious if the hurricane impacted that too. All right, so they had that second Prime Day, so that could also help. I'm watching SPY here, and to me, I mean, we have these kind of 3 reddish candles underneath the wedge. Today it kind of stalled at the wedge, and we haven't been able to hold above the 10 MA. We got a little runway for the close. I think, yeah, Palantir will catch that. I'll cover some of the, I mean, I'll be covering a lot of these in the weekend video too. So stay tuned for that. I think, though, that the bulls do need to get over and stay over the 10 MA at 581.70, and the bears need to crack and hold below the 20 MA at 577.14. I generally was using Wednesday's range as a gauge. We did get over it today, but technically it does have a bit of a look above and fail. So if price does what it should, we should rotate back down to that low at 574.42. If you're short, I would use the 10 MA now as a stop because that should not be cleared again if the bears are going to have their way. It would probably continue on higher, but we are really painting ourselves into a corner here, that 588 area. I wonder if they're going to make the run at 600 because we aren't overbought in the money flow, even though price has moved quite a bit. So I would use that 10 MA here as a trigger as a stop for shorts. If you didn't short, you could use that with a tight stop probably over high of day. If you want to use 584.46, I mean, VWAP is 581.81, so I think the bulls would really, at the very least, need to get back up over there. But now, again, we're caught in this little dinky range. Consolidation of range usually leads to expansion of range. Interesting where NASDAQ stopped, it was right on the rising wedge high. We are still above the 10 MA there at 493.28. It to me looks like there was just sellers at 500, like we discussed in prior videos. I thought they would make the run to 500, but again, responsive market, sellers. Because if let's say you sat through the decline that started on 7-11 and ended on 8-6, how do you now tell your clients you didn't sell 500? You know, you're not going to get fired for selling 500 in Qs. So that's my take on it, that there was just some responsive selling. It doesn't necessarily mean that we can't ride the wedge high up, but in the past 3 attempts, We have seen corrections to at least the 20 MA, which would be 490.19, so a 10-point back off, not exactly the end of the world, right? Let's go to Bitcoin. I've been bullish, but it still has to hold that 66,233 in the futures. That's the 78.6 of the range, and if that were to fail, it could get a little dicey. I mean, I would think at least the 20 MA at 64,702, and maybe even a run down to channel low. I mean, depending on when it did it, it would line up with the 50 MA really well at 62,000s. It's currently 62,119, but it'll move between now and then. So my take on MicroStrategies, I know this is going to be a little controversial, but you saw what happened to Newmont Mining yesterday. I'd rather just play Bitcoin than MicroStrategies. I realize it's sort of a levered up way to play it, and people like to do that. I mean, not everyone can buy Bitcoin. I used to prefer Coinbase, but MicroStrategies, bit of a topping tail today. I'd be on guard for a lower high on Monday, and if you were to take out today's low, that could get ugly, 218.25. But I mean, anything over 200 really is okay. I would be a little bit more problematic between 200. If that were to fail, you'd probably come down to the 183.70 zone. But I love that the trend line lines up really well with that. It's currently 196.15, but by the time it got down there, it would be 200, right? So if you want to put on some kind of a, let's say, put spread or put ratio that would benefit from a move down to 200, and then maybe sell like upside calls at 300, because that's the 2 times range up there, 299. I like that. If you want to go a little longer dated, protect it down to at least 200, maybe go $20 or $30 wide. If you want to go $40 wide, longer dated, that's all right. Like 200, 160, because that's a 50 MA. I mean, this stock can move, right? We saw from 10.14 down to 10.16. I mean, the stock moved from 227 down to 191. I mean, that's, $30, $40 protection range. I like that. Let's keep this train a moving here. Amazon. I think this is going to be a really important one for retail sales. People will extrapolate a lot. Look, it still has this resistance zone between 188.65, which was the old high, and the old most recent high, and then the 78.6 at 190.59. So that needs to clear. There's not that much more room up to the channel. 193s. I mean, could it pop through there? Yeah. I mean, if we went to the green channel high, you're looking at close to 200. So if you want to do a call spread, maybe $10 or $20 wide, usually what I'd like to do with situations like this is start off a little wider, particularly if it's longer dated. And then if it doesn't go my way, or if it just stagnates, or if it goes lower, I'll either stop out of it, or more often than not, try to give myself a little bit more time as long as the setup isn't negated, and I'll roll down the upper strike, and I'll bank that higher premium and just reduce my deltas by lowering the upper strike. If you're, I also like doing synthetic butterflies with stuff like this. I don't know if you own shares. So this would be if you own shares. So I'll just do it for a one line. Let's just say you have 100 shares. You could sell a 200 call against it as a hedge, and then to participate still in the upside, maybe buy a still higher strike. So you're doing a synthetic fly with some upside potential. You'd cap out at the old high, but then you'd have a little bit of, I guess, skin still in the game, obviously with lower deltas, but that to me would make sense. I'm also just not so impressed with the bears with what they have not been. I mean, they haven't really done that much with VIX, although we are over the 1936. So we'll have to see where that closes today. I think if they can get themselves up over 21s, maybe there's a move still higher. I had said in my last couple videos I didn't think they were going to give up much more on volatility, at least ahead of the election, because people who are diametrically opposed to these candidates, and some very ideologically, probably think the end of the world is coming if the other party wins. So they are putting on some protection. Also, we're going into earnings season, so managers are hedging up. So yeah, I think volatility will probably hang out around here, maybe a little elevated if we start seeing some crappy reactions on earnings. Oh, you want to talk Gilead? I haven't looked at this in a while. I had played this pretty successfully for a bit. Let's see. Wow, this is up a lot. 87.87 is the must hold. You're actually riding the underside of a progression line here, so you might want to trim a little bit. But 87.87, 88.36 plus, I think is okay. That makes some sense to me. Let's take a look at futures. Yeah, we are bouncing where we should. I really would like to see it be able to hold over 58.53 quarter. VWAP is 16 points or so away at 58.71. Probably by the time it would get there, 58.70 half or 58.75. Q is also 30 points, a little bit underwater. You know, when you get these big opening moves, they've been sold into lately. Just like if we get big down opens, they rally it in the afternoon. It's sort of a Costanza market, right? When you get overnight inventory, this is also a little bit of a trick that I use. If overnight inventory is all long, there's usually a rebalance to the downside, unless there's news and there's really strong breadth to the upside. If the breadth is mild, you'll usually get maybe a partial gap fill or the full gap fill. And the same thing with overnight inventory that's heavily short. You'll usually get people who play for the gap fill. I mean, there are some traders who only play that and they finish their day after they play the opening gaps. So I've actually been considering becoming one of those, but not yet. We aren't, you know, it's interesting that the Qs are above the 200 MA 30-minute, but the ES is below it. That's always my gauge here, and I like that the NASDAQ is bouncing ahead of that. So if you're long, 20,428, don't let it get below there if you're in long positions into the afternoon. ES, 58.68, 75-ish, or let's say 58.68 half. I think that's going to be a key pass, don't pass line. I think that's really when this liquidation break got its legs, right? Once it broke below the 200 MA 30-minute. I'm always looking for edges in the market and indicators that I can use to reliably to gauge where I think price is going to go. And over time, I've come to really respect the 200 MA 30-minute. I've also jumbled up over time my time frame that I watch. Futures usually trade in 30-minute blocks like the letters. So I've moved more into the 30-minute time frame lately, but I mean, I do 15 sometimes. If I'm in an aggressive day trade, I'll be in the 5-minute time frame. It depends, but if I'm broadly looking at the tape, I usually am in the 30-minute time frame. One of the things that's been a little concerning, and I think people are going to start paying attention, is that earnings pops are not really sustaining. I mean, JP Morgan did get up to the old highs, but it's sort of consolidating under them. I like that the pullback is shallow, don't get me wrong, and I actually think that this is a bit of a bullish consolidation given the fact that it's been up here for so many days, but it does need to clear, eventually does need to clear and hold the 225.48. Netflix too. I mean, that was really a pretty solid quarter. It's holding in the gains, though. Technically today you ended the one time framing on the auction, but again, another little crappy topping tail, and you really want to see that on a Friday. I still think it's all right. I mean, Netflix really could pull back to 736 and be all right. But I like the dubstep setup here. But again, we have a little bit of these look above and fails of the Wednesday high. So maybe the algos ran it up and ran the stops on the upside, and maybe they're going to try to run it now down on the downside and run those stops. It wouldn't surprise me in the least. So that's something to pay attention to. I'm also, what was the Taiwan Semi? That was one of the ones right out of the gate. And that today is first starting to really lift its head back up. It had exceeded the measured moves. Well, it didn't get the second measured move. 201.26 was one of the measured moves, and then the other one was 223.70. I used prior measured moves, and it just depends where I started them. I had used 67.69 as a measured move, and I pumped it up depending on which low I did it from. So those are the end results. And it got very close down to where I thought it could be a buy the dip again. It's interesting it didn't make the full check back. I was looking for that 193.47, but it didn't even hit the 10 MA, and I view that, there's two ways to look at that. Is it a half-cock slingshot because it didn't get the full pullback that it should have, and will the bounce be shallower? Or was there just so much demand for this thing that they bought it up ahead of there? I would have actually loved a move, and it still may get it, down to the 20 MA because that's riding the trend line at 189.66. So that'll catch up to the 193.47. But yeah, Taiwan semi looks all right. Everyone's always worried about the invasion of Taiwan with that, right? SMH, one of the things that's also had me really cautious, particularly with size of positions here, is that the market isn't functioning how I would want it to function for risk on. I usually like when SMH are leading the Qs and Qs are leading SPY, but it's been the opposite, right? SPY is leading the Qs and Qs are leading SMH. So the least risky is rallying versus the most, and that to me, or the most Momo, I should say, rallying. And this to me looks like it needs to hold 251.52 and really clear 255.66. And it just is sort of stuck in the mud here. The 100 MA looks like the key MA, though. We've had a few tests below it, but I mean, the more times, they always say the more times you bang on the devil's door, eventually someone's going to answer. So that's an idiom, right? I'm looking at breadth. I mean, breadth is really not that impressive today. NYSE is 1.47 to 1 negative. Qs are 2.01 to 1 positive. Ticks to me look a little middling to distributive. Yeah, a little bit. I think because we had a decent week, people took the pop today and booked in some gains. Any other questions? I'm just checking chat here. So this is a good way. Yeah, this is going to be a good way for me to use the back camera for image quality. We're gonna, yeah, these lives during the day I'm having good a time doing it. I just kind of like go on when I have a break. When I do my cappuccino break, I fly on here with you guys. If there's not that many more, we could just wrap it here. Anybody? Bueller? Ooh, Shaq. All right. Did anyone feel that the discussion of risk management the other day was beneficial? I was trying to do something that was a little more just than today. Shake Shack looks all right. I think there's people who are thinking they're going to benefit from the McDonald's debacle, right, with the coli. Oh, so let's do McDonald's and then we'll do gold and then we'll wrap. So this to me looks like it's in consolidation here, and it's just going to need the earnings to bust it up and out or down and out. If you're long, don't let it get below the 50 MA on you, 104.97. That's riding the trend. And the bulls do need to get up over and stay up over 111.29. I'm using that high from 5.6 as the key pass, don't pass line there. Speaking of it, so this is why I prefer playing the commodity directly. If you look at the pullback in gold the last couple days, it was infinitesimal compared to what happened to Newmont Mining, because there's no operational risk, right, with GLD, unless gold dumps. This to me looks like it's riding the channel high, and gold usually tends to end in a bang. It's like these multi-day up candles that just go parabolic at the end of a big move. It doesn't always have to happen that way, but the money flow isn't overbought. It's still above the 10 and 20 MAs. I would use 10 MA as the must hold now at 250.03, so don't let it get below 250. Newmont Mining, wow. I don't remember the last time I saw that thing down 14%, and then today another gap down. They did buy it back up. I had said in the video last night, actually, my super follower video, I was looking for 44s, 44.75 to 44.07 as a buy the dip, and then maybe 40 if it were to keep going. So right or right out in the 44s, and then if that fails, stop out and wait for 40s. But it looks like they're bouncing it early. Yesterday held the 100 MA, so that is the key, I say, MA. And if it were to keep going, the underside of the channel where it would probably stall, depending on how long it took to get there, is like 51s. If we were to put a fib retracement on it from the most recent high down to today's dump low, a weak bounce, by the way, and I don't use 38.2s on pullbacks unless it's a very large time frame, like it's something that's been rallying for a while and there's an overall big market correction. I will sometimes pay attention to it, but I often just take it off my chart. But that is 51.33. So a weak bounce would be to the 38.2. That's also something I use when I'm looking to short something. If it can't get over the 38.2 or even make it to the 38.2, I know it's kind of doomed. Good bounces, I like to at least see the 50% fib or the 61.8, of course. But usually once you get over the halfback, it's you could use the 50% line as the pass, don't pass line for who's right and who's wrong, right? Because it's right in the middle there. So I think we could wrap there. If you have any questions for the weekend video, let me know. Again, I'm back on YouTube. I have an offering on there for the super follower videos and the weekend video. Vimeo is, of course, the midweek video and the weekend video. I may start throwing in the super follower videos there too, but I've been getting a lot of requests. My messages are just like overflown at this point. So I try to focus mostly on subscribers, but I am offering some individual coaching sessions if you want to talk to me one-on-one. This is something I do. I have a private DM service for this that I don't really advertise that much, but if you're interested in that, you can message with me and do a once a month or twice a month call with me. But I am offering the calls now a la carte for $100 an hour if you're interested in leveling up your game or if you need some help. I usually find, unfortunately, when people get to me, it's after they've either taken a shellacking or people who want to level up their game. So those are usually the extremes, but I think in between there is more beneficial in some instances. Chipotle, the $60 area was the gap up after the earnings, and then it dumped from there. So that could be some resistance, and that's where it needs to clear. Chipotle, it looks busy to me. My store near me recently, I haven't been so thrilled with. I think the cleanliness looked a little not as good as when they first opened, and their iced tea machine. By the way, Chipotle has really good iced tea. So their iced tea machine has been broken, so I haven't been going as much. So Chipotle needs to clear $60. If it does, you probably got to run to 63s. I think the pullback, you're actually about to get a golden cross in Chipotle. I don't mess with Chipotle on earnings because I've been burned on it before, once very badly. Beyond badly for a Chipotle earnings. I was playing Strangles in it, and it had one of these, I forget what year it was, but it was like this gigantic gap down that just like soared through the lower strike, and I had it in 2 accounts, so it wound up being almost a $40,000 loss on something I was just looking to make a couple $100 on, or I forget how many, but it was a small position. I was on vacation too, and I had done a bunch of earnings plays, and they were all winners except Chipotle, and that just it kind of ruined the trip a little bit. When you're on vacation, keep it small. The size is small. I've only had one really good winner while I've been on vacation, and that was a big, oddly enough, I'm always short Netflix when it has big dumps. So yeah, it was Netflix. That was a pretty crazy story I had with that. I was on the beach, and I was just watching the price action, and there was something about it, and I rushed in an order, and I initially filled it wrong. I had to clear that, and if you've ever been on the beach in the Hamptons, there's like no cell service, so I barely got it in. And then the next day, nothing really happened, and the next day, nothing, and then they lost the Stars deal, and the thing just completely collapsed. So that worked out. Someone must have known something, and I just saw it on the tape, price action-wise. Just the order size and the way the stock was trading. It wasn't trading well. But anyway, that's another conversation. Justin, did you notice that the 20-period MA on the daily ES has held on the close all week, forming 3 higher lows now? Bullish, do you agree? I'm good with, generally, my rule of thumb for all of this stuff is if it's above and this has kept us out of a lot of trouble, for sure, in recent memory. If you're above the 20 MA, I'm okay buying dips. If you're above the 10 MA, it's still better. So usually when you lose the 10 MA, you hit the 20 MA, and if you lose the 20 MA, you could hit the 50 MA. It's sort of, my analysis is, if you hit a fib and you stall at the fib, you go down to the next one, and it always seems to work this way. And if you hold at that fib, you usually bounce to the other one. Same thing with the MAs. If they hold, they bounce and usually get to the next significant one, and if they fail, they go down to the next significant one on the downside. Vice versa on the upside. But yeah, I think it's significant. I like that the 20 MA, it's held the last couple of days. We tested below it on Wednesday, and then yesterday we held it to a T, and then today we never touched it, but we did test above the 10 MA. I'm looking at that on the close. I'd be very encouraged with the close if we can close over the Wednesday high. I'm looking in SPY, it would be 581.71. And what's the 10 MA here? 581.76. So yeah, I'd like to see it close above there. Right now it kind of looks like they're trying to pin 580. So, the option volumes are so nuts these days that back in the day, I'll just tell you, I've been trading since I'm 18. I'm 46 now. But yeah, it's been a minute since I've been at this. And I've noticed over the years, it was easier to figure out where the market was going to pin just looking at the options. But the volumes are so large now that I've even seen intraday shifts of where pins are because the market makers have to compensate so much. But I'm looking at the 580 strike. That would wipe out all the calls here. So yeah, that's really, 579 is really where there's 93,495, but it jumps to 184,000. So I think they're going to try to pin 580 here. And that same thing with the puts. That's where all the volume starts. It goes from 5,666 down to, and then jumps to almost 18,000. So I think they're going to try to pin the 580 number. That will fudge so many people here on the premium side. So that's what it looks like to me. They're trying to pin 580 today. And I think that was why there was some weakness off the highs and why price is holding here. Yeah, that looks to me like they're going to try and pin SPY 580. Let's see if we can figure out the cues, because that's always important. I'm just looking at volume and open interest, by the way, right in toss, and I'm looking at all the strikes. So this to me looks like they would fudge a lot of people right here at 496, actually. It jumps from 1,400 open contracts up to almost 8,000 on the put side. And then the calls really, there's a lot. Yeah, there's a lot at 497. Even today, there was a lot of volume there. So it looks to me like they're just trying to pin this. And this is really how those guys did it with GameStop and those back in the day, was they caused a delta squeeze when they brought it up. Market makers who were short premium had to buy the stock, and that hedge fund, I think it was Melvin Capital at the time, and they just got blown out. It's rare, but it does happen. I think the biggest one I remember was back in the day I think it was with Volkswagen or Porsche when they had that deal. And I think at one point Volkswagen was like one of the most valuable companies in the world when that happened. That was a pretty crazy day. I remember that. It's a long time ago already, though. Any more questions? If not, we'll wrap. I'm seeing more and more people come in here. It's weird, right? I've been noticing the engagement is different. Back in the day when we did these, there were so many more people who were participating. And I just see it with people who message on X. It seems like less people are on X lately. That's why I'm going back to YouTube. And maybe I've been doing a little on TikTok, too. I've been meaning to film some more videos for TikTok. I have a new format I want to do for that. It's going to be less trading oriented and more like finance oriented, like how to set up 401ks or the difference between Roth and regular IRAs and how to get out of debt, some methodology, how to do that. So I may do a little bit more of that kind of stuff on TikTok. All right, so I guess that's it. All right, we'll wrap it there. If you have any questions for the weekend video, just message me, and maybe we'll do a month free promo for that soon if you guys are interested in that. I know a lot of you are new to me and you've never seen my videos, so that's why I'm trying to get out from behind the paywall. I've been behind it for too long, and I want to start doing some more content that reaches, some new followers or people who don't really know my work. I always sort of take for granted that so many of you have been with me for years, but there are new people, and I want you to be exposed to that, beneficiaries of that work. All right, have a good weekend, everybody.